Eric Muathe, themother.com, for the weekend of March 28th and March 29th, 2015. Let's take a look at how markets closed in the US on Friday. We can see slightly closing higher on Friday. For the major averages, we see that the biggest mover was obviously crude oil, which was down about 5.8%, and the VIX, which was down about 4.5%. For the week, the S&P 500 was down 2.2%. For the week, the Nasdaq was down 2.69%. And we see that for the week, the Dow was down also about 2.2%. Let's take a look at the charts. We begin by taking a look at the Nasdaq weekly. We can see we did break back below this previous weekly breakout level, and that was at 4963.53. So as of right now, the previous breakout has failed, and that could become a problem down the road. Of course, depends on what the market does here short term. We see that we are back around the 10-week moving average and acting well. We are holding the 10-week, so that's okay. And keep in mind that this most recent high in the market from about a week ago came with declining RSI strength, as you can see here. So this negative divergence line that we've been watching is, I would say, part of the reason why the market stalled this past week and had a sizable drop, again about 2.5%. So as long as the markets are finding resistance on the top side, this market is going to continually keep running into trouble. If we take a look at the daily for the Nasdaq, we see that now we might actually see an argument that the market looks like it wants to bounce, because it's come back to the level around the 50-day moving average. It has held, so that's one reason. And the other reason is the line connecting the price channel lows. And you can draw it something like that. So this seems to have held, and if that's the case, again we see another reason why the market is bouncing, or at least close positive on Friday. We can also see that the RSI lows on the daily are showing that this is where the market is looking to hold, and as long as the market has come here and seems to be holding, one can make the assumption, because we don't know what the next move is, the assumption that this is actually going to become true support. We also see that that support line is coming exactly where we were expecting support. Why? Because the market has been coming back to this level and finding support. If you take a look at the most recent lows on this line, the market has had a short-term bounce after hitting that line and bouncing even here. So we see the same thing taking place here. The assumption has to be that now the next swing trade is to the upside. If we take a look at the Dow weekly, we can see that the Dow failed to break out last week, or Friday of last week, did not close above 18,140. So there was no breakout there. So that another red flag for the market short term, because that breakout failed. We also see that that breakout attempt was with a declining RSI strength there, which might be the reason why the market pulled back this week. And we are now seemingly forming a wedge on the weekly RSI, connecting the top side and also connecting the lows here. So whichever direction the market decides to go, if it's going to break that wedge, that's going to be for a bearish swing trade. That's going to be down for a couple of weeks, couple of months. If we break out above that wedge, we should expect the market to be up for the next couple of weeks, next couple of months. So that's something to keep an eye on. Also, let's not forget that the weekly RSI is close to 50, and if it breaks below 50 on the week, it does break below 50. If it does, that would suggest that net we are going to see a big drop in the market during the week when it breaks below that 50 level. So let's keep that in mind. Right now, in conclusion here for the week, the Dow is within a nice wedge, and everybody's curious to see which way the market is going to resolve outside or out of that wedge. You take a look at the Dow daily, and just like the Nasdaq, I keep saying transports, don't know why. You can see that this support here connecting the lows on the daily, and now here. That's good. We also see that the lows line is holding with that support right there. As of right now, Friday's positive close was good. We were expecting that throughout the day, and that seems to be confirming that level. Also this line here connecting, or at least intersecting there, which is a level of support. So as long as the market is bouncing there, it looks like the bulls want to take back the market. If we take a look at the Dow Hourly, we go back to the previous level where the market was stalling. So during this run here, those highs, the market had come back to this declining hourly RSI line, and the RSI line is at a period of 26, so not the default of 14, but actually 26 is where we get this. So there was resistance there, and the market did pull back. Now we are looking at the exact level where the market has been seeing nice action with a rebound every time on this green line. If you go back to this period here, market recaptured the green line, nice movement, and also here nice movement. Same thing here during these lows, here during those lows, triple bottom here for lows, I believe is right there. So, and recently these lows were here, and you can see right now the market is also holding there on the green line, indicating that even though the market is choppy and confusing, the hourly indicates that as long as the market is back above this green line, the market should be poised to go higher. We also see on the hourly connecting the lows, something like that. That as long as the market is bouncing on this line and respecting this line, then we should expect higher prices. It's only when it finally breaks below that we can start looking at a different market that is going to be poised to go low, or at least a market that has broken a trend line. Right now it looks like it's finding support exactly where it needs to. If we take a look at the Dow 30-minute chart, we can see that coming off the recent pullback, the market had broken a trend line here, and that break, this level here, brought the market down. Market came back to the same level, so back to that same line there. We were watching that, we saw resistance. Indication was that now the market would be poised to go lower. That's exactly what happened. And now we see the exact opposite, which is there was a short-term breakout on the way up, which is somewhere here, and so this entry level began this nice move, and so the market has come all the way back to testing the same level at the lows, and the lows seem to have held. So it's curious how the market has a memory right there, and since then we see that hour to hour the market has recovered. I want to show you something really interesting, or at least I think it is if you take a look at the red line here, this red line that I'm also drawing in blue right there, we can see that this negative divergence line at that point happened when the market made a higher high here and lower lows. If you extend that same line, market gives you an interesting point of reference. You can see we bounced on the line once we moved above it here. We bounced on the line, which was this lows. We've come all the way back to the same line here and bounced off it, which was this lows. So the market seemed to have some type of memory that the same line on the negative divergence, improving prices, declining RSI strength, that was a red flag. If you extend the same line the market has a memory, because once we moved above the line there, it's become support. It was support on the back test here for these lows, and the market did move higher, as you can see. And now we've come all the way back, touched the same line, and bounced off it. And you can see that the market is already building on that. So markets do have memory. How that plays out or how it happens, it's tough to tell. But I want to show you how this is interesting. Let me show you one other S&P 500 long-term monthly view. If you take another line like that, you can see that sometimes if you draw lines, and this is connecting the lows on the monthly 1990 here in 2002, and again at the lows of early 2009. So markets have an interesting memory, even lasting many years, and I'll show you that again here in a couple of minutes. So the Dow Transports were leadership on the way down this week. In fact, if you take a look at the Dow Transports, for the week they were down 4.89%, was about 5% at the lows for the week. So they were leadership, and they started moving on Monday while the market was still stable. But now they've come back to the lows of this channel, which has been established since 2012. So something like that. So this is exactly where it found support at the lows of the week. Whether it's going to breach that or not is tough to tell. We also see that it had a relatively big down week because the weekly RSI moved below 50 this past week, and that is the reason why for the big candle down. So now we see that it has come back to a level where it should, if it's going to find support, start looking for support. Right now that support is taking place. Now there are a couple of other lines that I think we can look to for support. If we take the previous high, so this line here, once we broke out above that line, it was a nice entry here, late 2012, early 2013. From here, you can see the market had a nice run to new highs. So we take that same line and extend it this way. And you can see since then, I'm talking about since we jumped above this line there, this has been used by the market for support. We've been talking about this for many weeks, many months, and we can see we came here, we held, it was this lows, and now we came close here, which was this lows here, and now we are close to that line. So around this line, if we can bounce on that line, that would be one reason why this is going to be a level where it could become interesting for a bounce to the upside. So that's one line. The other line is connecting the RSI weekly lows like that, and this is a multi-year weekly chart, so connecting the lows of 2011, the lows of 2014, it connects to the most recent lows, which was here, and now we are back to that line. So this is the second line where this could actually find support. Hope that makes sense, that this is also another line where the market could find support on the weekly chart for the Dow Transports. I'll show you line number 3. Line number 3 is a simple one, is around the 50 level, and ever since there was a breakout here around the 50, so I'm talking about this breakout, once we had this nice 50 zone, the market has been coming back to the 50 and holding for nice lows, back to the 50 and holding for nice lows. Recently held the 50, which was here, and now we are back below that. So you can see that if it can have another move back above 50, expect a big up week whenever it moves back above 50 on the weekly RSI. And in fact, let's take a look at a clean chart for the transports, and so I can show you that without all that noise. So bear with me for a second. So this is a clean chart for the Dow Transport going back 4 years. I want to show you the 3 lines of potential support. Line number 1 connecting the lows. Line number 2 is the previous breakout. Line number 3 is around the 50 here. And we can even say line number 4 is connecting the price lows like that. So all this, interestingly enough, this is exactly where the market closed on Friday. So it would make sense for the market to bounce. Otherwise, if we break those 3 lines and trend lower, that's going to be a major break and probably announcing the end of the bull market. So I think those 3 lines are important, because if we bounce, that's good. If we break that level, that's going to be a serious breach, and the market could probably be announcing that the bull market is in question. On the Dow Transports, we can see that they came to the 200-day moving average and seem to be holding. So back to the 200-day moving average there, seem to be bouncing. Also, there's a level connecting right there, and ever since it moved above this level, it's become support, as you can see on many occasions. Support there, here, 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 and now also here. So as long as it's bouncing on those 2 levels, the 200-day moving average, and also bouncing on this line, it should be good. Otherwise, if we break below those 2, then we have to be a little bit concerned about downside potential in the market. That's assuming we are all bulls, and I know we are not. So that's what I would watch for support or failure. Right now, it seems like the market is finding support. Take a look at the Dow Transports from hourly, and I'm using RSI period of 26. Want to show you the same thing I showed you on the S&P 500 long-term view. So this is hourly, RSI period of 26. If I take the lows and draw a simple straight line, it connects this low through this lows, this low here, and now where it touched right there, which was this low. So is this a valid reason for this to bounce? I am not sure, but we've seen this before on the previous chart on the S&P 500 monthly, that something of this type of nature observation sometimes does give a nice bounce. If we go back to the S&P 500 long-term monthly chart going back to 1990, we can see the same thing in play as I discussed earlier, connecting the lows in 1990, lows in 2002, and lows of early 2009. And now that we have the S&P 500 monthly chart in front of us, we can take a look at some long-term monthly view, and it is when the S&P 500 breaks a multi-year monthly trend line on the RSI, bad things happen, or the market goes into a funk. You can see there was a break of this trend line here in sometime mid-2000, which was this period here, and we know we had a major bear market. We broke another trend line, multi-year trend line here, which was late December 2007, which was here, which led to an amazing period here down. And now we are looking at the possibility, it's just a possibility, but it's probably happening also, that if we break here early on in 2015, that this could lead to a major multi-year, multi-month pullback, if not an outright bear market. So that's a long-term view, that if we break this trend line here, just like we did here in 2007, early 2008, this could be a problem in the market. So you have to be very vigilant here. Any further erosion in prices, if the market is finding itself below that line, you have to be aware that could set up for another fantastic drop in the market, a la 2008. Take a look at the current S&P 500 weekly. We can see that the weekly failed to break out above 2110, so 2110, it failed to hold above that. We can see that that failure came with declining RSI strength on the weekly. So that's resistance for now on the upside. And keep in mind, we're very close to 50 on the weekly. So if we slide below 50, that could be a problem. If we take a look at the daily, for the SPX, we can see just like the Dow, it has come back to a line of support right there. So this line is where it has been finding support, just like the Dow and the Nasdaq have been. And the S&P 500, if I can show you for those who are new to this idea, every time it recaptures back above the line, we have a short-term move higher, if not a move to new highs. Every time. Double bottom there, which was this lows, touch that level there, and recently same thing here, which was right there. So the S&P 500 daily, in my opinion, looks like it also wants to join the Nasdaq and the Dow for a bounce. If we take a look at Australia now, oh excuse me, actually it's Canada, not Australia. Take a look at the Canadian market, we'll see a wedge on the daily again. It's formed a wedge this week too, and so you can see it's trading close, if not around, the 50-day and the 200-day moving average here. So this is a little bit of a confusion, which might explain this most recent sideways action. So above the wedge is bullish, obviously below the wedge is gonna be bearish action. If we take a look at the VIX, we can see that on the daily, right now we are looking at a VIX showing a little bit of resistance around this level, or if you can draw it this way, you can see that it's come here and showing resistance. So as long as this is what it's been doing recently, coming to those levels and showing resistance, the VIX is indicating that the market is not as bearish as it might seem day to day sometimes. Take a look at the VIX hourly, and it has come back to the level where the VIX seems to stall and the market seems to be a buy. The VIX stalled here, market was a buy. VIX stalled again here and the general market was a buy. The VIX would stall here, it is here, and the market was a buy. And the same thing recently, remember we had seen this, the market was a buy, and now we've come back to the same level, and the market since then has come off the lows. And we are using RSI period again of 26 on the hourly. So the VIX is indicating, in my opinion, that the market continues to be healthy. If we take a look at Apple, we are taking a look here at a stock that has come off the highs but is finding support around the 10-week moving average. And the buy point for a breakout, if you want to play momentum on this name, is to wait for it to break out above the most recent all-time weekly closing high, and that would be at 129.50. If it can break out above that, it might be beginning a new leg to the upside. Now if we take a look at the daily for Apple, we see that it is come back. So let's take a look at the daily. It's come back to a level where it could be finding support, number one, at the 50-day moving average, just like the Nasdaq there. And we see that we have a line connecting the lows, just like the Nasdaq. If it can hold and bounce on this line, that's going to be constructive. So that's one thing we can watch for. And we can also see that this most recent move here in price began when the RSI jumped above this level here. And so draw a straight line. You can see that the stock is trading exactly on that green line. So those two lines, the line connecting the lows there, and also the line connecting the previous best entry recently, which is this level, all coincide exactly where it closed on Friday. So a bounce off this line is exactly what the bulls want to see. Otherwise, if it breaks below either of the lines, for example, if it breaks below this line, any break of that line is going to be not good and would indicate lower prices. Right now it's on the line, also trading around the 50-day moving average. So as long as it's holding on those two, on the RSI and on the average 50-day moving average, I think the stock should be okay and due for a bounce. Now if we take a look also at the hourly, we can see that it's not broken on the hourly as of right now, because you'd expect it to find support where it's been finding support like that. Ever since this nice entry, the stock has been coming back here and moving higher after touching this level. And so now we are back here. We seem to be holding. Maybe it suggests, if it's consistent, that eventually this is around here, it's going to stabilize and start building to the upside. So I want to conclude by taking a look at the monthly charts. And on the monthly, the markets look okay in my opinion, because yes, they are slightly down since recent highs, but really if you take a look at where S&P 500 needs to be above the prior weekly or the prior monthly closing high, that would be at 2067.56. You can see that it can very easily recapture this level. So above this price range, the market should be okay. If you take a look at the Nasdaq on the monthly, you can see that the RSI continues trading above 69.10. You can see that the Nasdaq is above the previous monthly breakout. So this chart, gives you pause because it's not broken. It could eventually break, but as of right now, it looks okay. The breakout is still in play here. So nothing to be worried about as of right now. We take a look at the Dow on a monthly, and we can see, yes, it's off the highs, but it's very close to the previous breakout level. So as long as the Dow can recapture that level above 17,828, anything above that would be that the breakout is back in play. Otherwise, the more it trades below that level, the more it's breaking down. Yes, the video is slightly lengthy. Otherwise, had a lot to discuss. Enjoy your weekend. Eric Muade. Good luck, peace, and blessings. Woo!